What is equity? Equity is a cornerstone concept of finance, embodying ownership interest in an asset or a company. It represents the residual interest after deducting liabilities from assets and is a vital measure of value for shareholders and investors. In the context of a business, equity can be categorized into two primary forms: common equity and preferred equity. Common equity represents ownership through common stock, giving shareholders voting rights and a claim on the company's profits. Preferred equity, on the other hand, provides a certain preference, such as a priority in dividend payments, but typically does not carry voting rights. Equity is often perceived as a cushion for creditors. In the event that there's a liquidation or bankruptcy, shareholders are the last to receive any remaining assets after all debts and liabilities are settled. This residual claim reflects the risk-return dynamic inherent in equity investments. While equity holders assume higher risk, they also stand to gain a share of the company's profits and potential appreciation in the value of their holdings. For publicly traded companies, equity is dynamically represented through the stock market. Share prices fluctuate based on market sentiment, financial performance, and broader economic factors. Investors analyze key equity-related metrics such as price-to-earnings ratio and return on equity to evaluate the attractiveness of an investment initially. Equity financing is a common method for businesses to raise capital. By issuing stocks, companies can secure funds without incurring debt. This approach allows firms to distribute ownership amongst a diverse group of shareholders, fostering a sense of shared ownership in the company's success. Equity is prominently featured on the balance sheet, providing a snapshot of a company's financial position. The equity section includes common stock, retained earnings, and additional paid-in capital. Understanding this section is crucial for investors and analysts assessing a company's financial health and growth potential. In personal finance, equity is often associated with home ownership. The difference between the market value of a property and the outstanding mortgage represents the homeowner's equity, reflecting ownership stakes in the real estate itself. In conclusion, equity is a multifaceted concept that plays a pivotal role in both corporate and personal finance. Whether evaluating investments or gauging the financial strength of a business, a comprehensive understanding of equity is indispensable for making informed financial decisions. Please note, while we may discuss finance, investing, and money on this channel, this video should not be considered financial advice. When investing or making plans for your own financial security, please seek the guidance of a licensed professional capable of making more informed decisions. If you make a financial life decision based upon the content of this video or channel, then please do so at your own volition and at your own risk. This channel and the people associated with it should not be held liable for your investment choices. All the best, everybody.